Hello, this is the HackerNoon podcast, and today we have Joshua Baker with us. He's the Chief Operating Officer at System 9, and he has a background in steel. He invented a new type of steel that had a very high carbon content, and it was just sharing his fun facts where it was harder in certain places and softer in certain places, a new structure of crystalline formations. But more than that, he is now looking to make crypto ethical. He graduated from the University of Mississippi and he has been mining Dogecoin since he was 13 years old. Without further ado, hi Joshua, how are you doing?
Hey, I'm great. Yourself?
I'm doing good. Thank you for asking. And thank you for taking the time out for the HackerNoon podcast. So,
Of course.
yeah, so let's get into the meat of the matter. What exactly is market making?
So, market making in traditional industries is there are firms that exist that are regulated usually, in speaking from a U.S. point of view, regulated by FINRA and the SEC, and they provide very specific bid and ask spreads on both sides of the market with tight spreads on exchanges like whether it's the NASDAQ or even foreign exchange currency markets. And they're usually hired by exchanges or they're hired by certain large securities to provide liquidity on these exchanges. And I guess just to give an example, so if you're IPOing on the NASDAQ or any other stock exchange in the US, you're legally required to have 3 market makers. So it's a very old industry. I believe in the US exactly, it's been around 200 years or so, on whether it was like grain exchanges early or stock exchanges since their formation. It's a very old industry. Yeah, but in crypto, it's interesting. It's taken. I was actually talking to a friend at Fireblocks recently, and we were talking about how the definition of market maker has changed in crypto, because a lot of times with our contracts and with our clients, we don't have the same very specific parameters required as, say, a stock market maker would. So, for example, we don't have to maintain, sometimes with certain pairs, we don't have to maintain an exact spread breakdown with certain uptime. Sometimes we're far more loose on our requirements. So it's a very different type of market making, but it definitely is born of the same thing. Yeah.
Got it. Like, speaking from someone who does not have a finance background, like clearly, if not anything else. So the way we see it is that we never heard about market makers when we think about stocks or even like IPOs, whether on NASDAQ or some other stock exchanges out there. But when it comes to crypto, market making is taken as something that you need to have, which is fine, which is very understandable for people who come from a finance background. But for laymen, it sounds like whether you are manipulating the markets. How do how do you like respond to that? Like, how do you get people who don't understand finance to understand market making?
What's really depressing about crypto market making is, outside of a few firms, they're actually right. Almost all market making, and I guess like for the listeners, I'm holding up air quotes. A lot of the market makers that people talk about all are fake. They're not market makers, they're market manipulators. And that's a huge distinction that needs to be made. There's an amazing article. So we at System 9 just published a website and an article writing more about this article, but there's a HackerNoon article called "The Good, the Bad, and the Ugly of Market Making" that was a masterpiece for describing what real market making is in crypto. And I highly recommend anybody who's confused about what market making is to check that out. And check out our subsequent sequel article that we published called "A Fistful of Coins," a bit of a play on the name. And it's really interesting to see. I guess I'll just start immediately with a story of something that's happened to one of our clients, just to give an example of what other market makers are doing. There's a market maker, and I won't like specifically say the name because I know I don't want my legal counsel to hate me for this, but there's a venture capital funded market maker that they are one of the sole market makers on a very large centralized exchange that's highly regulated in Southeast Asia.
I think I know the name.
Yeah, you probably know who there's two or three that it could be. And these guys, they charge $10,000 per month to make markets, and all they do is fake volume. And so we signed one client from them because we don't charge a dime for market making. Like we won't.
Really?
We're the only feeless market maker in crypto, because that's how it is in the US for all traditional market makers. They don't charge for market making. So when we got into crypto, we were like, wait, there are all these market makers charging for market making? That's ridiculous. We can do it for free. Like, what is going on here? And we started market making for these guys. And within 24 hours of them closing their contract with the unnamed market maker, their volume fell to $0.00. That, I wish that was a joke. It was entirely fake volume, and it was the most disgusting thing I've ever seen. We look at their CoinGecko, and I was like, I couldn't believe it. I get a text at 3 a.m. from our CTO, who's like, is there a bug on CoinGecko, or am I seeing this right? The volume just fell to 0, and we're about to start trading in like 5 hours. What's going on here? And we realized that all of the volume that's been on this exchange for a month for this one pair was completely fake. And that's not market making. Market making is assisting in the growth of organic trading volume through tightening the bid-ask spread and making it where, let's say you want to buy $100 of Bitcoin. Whenever you buy it, you don't move the price significantly. It's so that there's some stability and ability to buy into and sell out of markets without having a ton of slippage in price. And that's really that's the goal of the market maker. The market maker should be making it where retail and large traders can actually trade without having to worry too much about the liquidity or the ability to exit or enter positions. That's a market maker. It's a very simple concept. They've existed for 200 years for a reason. And we were founded by one who, and I guess this is just why we've been able to grow really quickly. Our CEO is, I think as an individual, he may be the most experienced market maker in crypto. His name's Peter Sokolow, and he's a rock star. And he traded for 20 years. He was the youngest ever floor trading market maker at the Chicago Merc and Chicago Board of Trade. And he traded there for 18 years. And he was a pretty integral part of a lot of the early market making, high frequency trading algorithm building. And so he's got a really unique background, and it's a pleasure to work with him. He's like the best CEO you could imagine. And a lot of almost all of our strategies in our market making comes from him. And that's our goal, is to cut out that first kind of market maker that is manipulating. Sometimes we've had a bunch of clients ask us to do pump and dumping. That's something we won't engage in at all. We just say, okay, no, we're not going to. Yeah, they try to pay us for it. We had a very early client ask us, oh, hey, will you guys take $250,000 to pump our price up? And we'll also provide you the capital to be able to pump the price up. But we just need it done by an external entity. And we were like, what? You're going to, what? And we just said, no, absolutely not. We've abide by US regulations on this and FINRA regulations. So we're like, no, we're not going to touch this. So we just, anytime a client asks us that, or a potential client, you stop talking to them. Yeah.
Like I want to digress for a minute before jumping back into this conversation.
Please.
Yeah. So how different is the crypto industry from Steve? You basically had a patent, you sold it to a family office, you made legitimate money. And how different is this? Like, how different is the cryptoverse from that? Because Steel has been here since what? The Stone Age, like
thousands of years, whatever. Yeah.
Lots of years.
It's coming from, I guess my background in steel is very different. So I worked with a family friend of ours, and we had done a number of work on patents for brand new types of steel with unique properties, like you mentioned. And where I worked, wow, it's funny. I was never in front of a computer. We were always out actually building things, or using hydraulic presses to test stuff, and forging actual like metals and all that. And then I'd studied mathematics and economics, and I knew a lot about the actual financial like mathematics and stuff. And I joined System 9, and coming into crypto was a total 180 because every day I'm on calls now. I'm in front of computers 24/7, talking to all these token projects all around the world and exchanges. And I'm like, I sort of jumped in head first. Right when I joined System 9, there was an event called Consensus that it was this large, people in crypto are very familiar with it. It's a giant conference every year. Yes, yeah, by CoinDesk. And I actually, if you go look at the, what was that?
Competitors.
Yes. Yeah. Oh, sorry. Yeah. But
okay.
Regardless, I went to this event, and I didn't go to any of the CoinDesk stuff, so don't worry too much about that. But
please, you're all friends.
Okay, cool. I stuck all to the networking side, and I went and they tweeted about me because I broke the record for the most meetings had at Consensus. So I think I had 190 something meetings in a 5-day period. Wow. And so I was like, yeah, it was a lot of fun. And I got to meet almost all of our first clients came from the networking portion umbrella. And it was great for us. And we got our name out there a bunch, and I've just overall loved it. It's been great because I get to do a lot of networking as well as learn a ton about all these new projects. And I'm kind of on the ground for a lot of these really early, like DeFi. We were very early on that just because we knew so many of the original founders of a lot of the token projects. So that was something. So it's nice to be able to see where crypto is going to go before it heads in that direction. Yeah.
Got it. Glad to hear that you are hopeful about the future.
Absolutely. Yeah, very optimistic.
Yeah. We need more people like you. So now jumping back to the original point, you spoke about slippages, you spoke about the price does not change a lot. People don't get it. It's too technical of an information for a lot of people. We are just coming to grips with words like wash trading and circular trading. Yep. So could you explain what does wash trading mean? And if you have any examples from exchanges that do it, that would be very nice. And then we could go over how is it different from market making? Because yes, wash trading is illegal in certain geographies if you catch it, but market making is a requirement, as you pointed out about NASDAQ, right? You need to have 3 market makers. So how is that different? How would you explain that to a layman like me?
Yeah, absolutely. So wash trading there's a number of ways you can do it, but the definition in essence is fake volume where you have 1 or 2 accounts that you're able to trade with yourself only to create fake interactions and fake trades to occur. So you'll see trades that are executing, but what you don't realize is that they're between the same person. So you get the appearance of volume or of liquidity, but there's really nothing there. So it's a fraudulent trading activity that shows that, oh, hey, look, there's all this volume in a market. It seems like there's probably a lot of hype around it, and what people think it does is they think it gets people excited about, oh wow, look how popular this is. It's doing millions of dollars of daily trading volume, but what they don't realize is that, or the retail investors a lot of the times don't realize, is that all of that volume is probably between 2 people, or maybe between 3. So it's not a fair representation of what actually is going on or what the interest really looks like. And that's a really dangerous thing, especially because you see so many exchanges now that come out of nowhere, and then suddenly they've got hundreds of millions of dollars of daily trading volume. Right. And then when you look at any of their social, like how many times their website's refreshed or anything like that, it's like a few hundred times. It's like, oh, sure, yeah, in 5 refreshes, people did $5 million of trading volume. Sure, that makes sense. Yeah. And so I would explain it as it's just I'm trading between myself over and over and over and over again, so that it gives the appearance of volume. But what we were actually on a call a day or 2 ago talking with this about a client. There was a client who was interested in us doing wash trading. We were like, no, or look, you might trick 5 people into thinking that there's some real volume there, but any trader who's experienced can look at those order books and say, no, this is BS. They'll just go, no, this is fake. Look, this is obviously fake. And there's a number of academic papers that have come out recently that we to cite that show that somewhere between, depending on what exchange, obviously, most exchanges have between 70 and 90% fake volume.
Can you please repeat that for us?
Yes. Most exchanges, most crypto exchanges have between 70, and there are obviously a few that are like way lower, but most exchanges have between 70 and 90% fake volume. And there was an academic paper too I can probably send over to you that you could probably link as well that give exactly that information. And it's mind-blowing. That's a thing. But there's a number of exchanges that we work with that have almost no fake volume. We really like to stick to the exchanges that we can trust the volume of. And that's where almost all of our business partners are located. But if you go through CoinGecko and you just look at the relationship between the number of page clicks on an exchange and the daily trading volume, it's very obvious. And even you don't need a background in trading really to be able to see, oh, there's something up here when an exchange gets 10,000 page views in a day, and they apparently do almost $1 billion of daily trading volume, or $500 million, or $1/3 billion. It's, but then you look at somewhere like Binance, for example, and they have millions of daily page clicks, and you're like, okay, that's what real volume looks like. That's what real interaction looks like. But yeah, there's a lot that are suspicious. I'll just say that.
Yeah.
Yeah.
No, definitely. And it's I thank you for the opportunity for naming Binance. Would you call them somebody who has, let's say, over 90% non-wash traded trades?
Yeah, absolutely. Yeah. They're very legitimate. They're in hot water legally right now, and I won't talk about that, but I'll talk about just the volume side. It's very obvious that they're the most popular exchange. There's not really too much of a debate about that. Maybe on some days Huobi is or OKEX is, but yeah, over 90% clearly. It looks great. Almost every one of the, so I guess you can, and I guess this is also just a little bit of information for people that aren't into crypto. There's two real buckets of market makers in crypto. The first kind is what we are. We do a lot of altcoin market making where altcoins contract us and we go on exchanges and they make accounts and we're given the trade only API keys for them and we market make. And like I mentioned earlier, we don't charge a fee. We're the only ones that don't charge a fee. Everybody else charges like a monthly fee, and then they get some percentage of the revenue that they generate. So it's, if they, let's say they trade profitably one month, they get 50 or 80%, some range.
Wow.
Yeah, but all we do is we do purely the performance, where it's like, oh, we generated an additional 2 to 5 or 7% monthly on the account. That's our profit. We get some percentage of that. That's how we make our money, is purely on performance, and that's how we do it. But there's the second branch of market making, which is far more institutional, and you can look at these guys as like big quant trading funds. So there's a number of them that work on all these exchanges that are pretty popular, like Wintermoot, for example, that publishes on HackerNoon and has before. One of the founders. They're a quant trading fund that does a lot of market making, and they do a lot of volume, and that's really the second bucket. But they don't really touch, I don't know about Wintermoot specifically, obviously, but there are a lot of those market makers that do the quant trading stuff. They usually manage their own money, and they usually don't market make much on smaller exchanges like tier 3s. They don't really touch. It's only tier 1s and 2s really. Yeah.
Got it. That's nice. And that's nice. And thank you for that particular insight, because from where we stand, Binance is this paragon that we have right now, and we don't want it to fall. Nobody wants it to fall.
Yes, correct.
The ripples would be huge. Crypto might not be as we know it.
Yeah.
But on the other hand, we have seen you have been mining Dogecoin since you were 13 years old, right?
Yeah, correct.
Sure. So first I've heard about those crypto exchanges who offered market making as a part of their listing fees. So you pay them hundreds of thousands of dollars, allegedly. Then you also pay them that monthly fee, which is again tens of thousands of dollars for market making, which is basically wash trading. And a lot of these exchanges were doing it. You proposed one way of finding that out, which was check their refresh rates, like how soon are those websites being checked out. What
Mhm.
are some other like rules of thumbs of sorts that laymen could use to make an assumption whether a particular like token is being pumped, whether it's being bot traded or whatnot?
Yeah, one great example is that, as well as you can just check out on, people infamously call it crypto Twitter if it's something that's actually pretty interesting and there's
It's
some real
toxic,
interest in.
man. It's
Yeah,
toxic.
it's toxic, but it is a good place to figure out the interest. I'll just say that. But yeah, besides that, a lot of it comes down to, I usually, whenever I'm doing research on a token that's talking to
Mhm.
us or anything like that, I try to learn as much as I possibly can. And this is also a good way for your readers to figure out and listeners to see if there's a way, if something's being pumped or whatnot. It's just go visit their Discords, go visit their Telegrams, go visit their website, see if there's actually users. That's really like my favorite way of doing it, is I like to actually get down into the weeds and learn more about individual projects and try to get myself as, because if I can't understand, I like to think if within an hour or two I can't understand what a product is or what a company or a coin is, there's
Mhm.
usually something wrong or they're trying to hide something. So that's usually like that's a good way of checking, is, does it feel like they're trying to hide what they're doing? If so, then run away. Yeah. But yeah, page refreshes is one. CoinGecko's trust score is usually pretty good. I'll say that, as well as just, you can see what exchanges a token is listed on. That's usually very indicative of
Mhm.
it's usually very indicative of the trust score of what I would like personally say about them. And obviously this is not investment advice in any way. This is just
No,
comments
agreed. We
on
also
trust. Oh no, I'm just trying to
trust
save my butt.
platform.
Yeah,
So,
yeah. You can look and see, oh, are they getting listed on very suspicious exchanges that don't have very high trust scores and most of the volume looks fake? Probably should be careful. Probably should be careful. Yeah.
definitely got it. So my key takeaways over here are trust your gut and
Mm-hmm.
trust that the people behind the scam are probably lazy. Because these guys are
Yes.
spending thousands of dollars to fake their volumes and they
Yeah.
cannot bear to spend fractions on those fake Twitter
Yeah.
followers, fake Discord followers.
Oh yeah. Yeah. It's interesting. I'm liking that we get to work with so many great projects that
Mhm.
are really trying to take that. And this is like a bit about what we're doing now. So we've just started our blog, and it's on our website, and it's all about, we're featuring a lot of our token project clients and exchange partners that we believe are acting in that ethical sense and trying to be as crystal clear as they possibly can to their, whether it's their investors or whether it's their people interested in buying their token or the exchanges or their business partners, and making sure that they're doing the right thing, they're being as ethical as they can be. That's what we're trying to do, and trying to bring that to be like our main business focus point. Like, our mission statement is making markets fair and square, and that's like our big thing, is avoiding a lot of I know it's funny, but it's fun. We really like to stick mostly to the projects that we trust and projects that we think are genuinely engaged in trying to grow the ecosystem. Yeah, especially working with exchanges in that front. Yeah.
Got it. Got it. So now I'll give you the opportunity to either, if you have a favorite project among your portfolio of projects, you could name
Ooh.
it, or you could use a hypothetical case study. What I want you to do is tell us what a normal day of market making looks like. What do you guys
Absolutely.
do? Yeah.
Yeah. Ooh, it's tough. We work with a number of great projects that are all great in their own ways. Like one of my favorite parts about one of our projects, Redcoin, is Redcoin is focused on charity. They're focused on community inclusivity, and I love that.
How's it
I mean,
spelled?
another REDCOIN. They're one of
Got
they're a very old coin, a pre-ICO token. We're good friends with one of with the lead project
it.
manager, and we stay very active in their Telegram. Another project that we love, let me think. There's a lot of the US exchanges we work pretty closely with. I would highly recommend reading more about the management teams of places like Gemini, places like
Mhm.
Binance US and Kraken. They have great teams and great people, and I've never had a bad interaction with any of them. Always a pleasure to chat with them.
Right.
There's a couple tokens that we can't talk too much about that I love working with, just because they're doing a lot of new innovative things. A lot of them were intro through a number of our business partners, whether it's like custodians or exchanges or whatnot. Yeah, I'm trying to make sure that I'm not violating any NDAs by talking. I know Redcoin I'm allowed to talk about.
Crypto and NDAs. They want you to sign a NDA for a meeting that you take with them.
Yeah, NDAs are annoying in that regard, but it is important. They are important. I'll just say that, because it's like sometimes you don't really want your clients, like your partners, like going and screaming over on the rooftops that they're working with you. But a lot of our partners, we like to stick with the trustworthy ones, the guys that we know are adding value to the space and all that stuff. Like one project we're working with, and was actually one of our first clients, was this LCX, the Liechtenstein Crypto Asset Exchange. We worked with them for a while. Monty, their CEO, is a pretty popular Twitter guy. So yeah, I stay off Twitter. I only opened an account on Twitter like a week ago. I'm not a social media guy. Like I like to stick to just like the private Telegram channels and all that stuff with some friends. Yeah, and all of our connections to these tokens and exchanges. I keep it low key. Yeah.
Good for you.
So I should say I didn't answer your question.
Yes.
I was about to say I didn't answer my apologies. I sort of get so interested. Yeah. A day of market making, the way it works for us is, and I guess it's difficult. So for a day, it's pretty simple. It's just we start our bots up and our algorithm runs, and it's on different exchanges that we're on, and it's usually pretty hands off. We run just to get a little bit into the weeds. In traditional finance, it's very popular for quant strategies to be unmanaged. So you turn an algorithm on, you let it run for 3 weeks, and then you check on it. That's how it goes, because their markets are far less volatile than cryptos. Right. But in crypto, that's just impossible for a lot of places. Usually you do what's called a quasi-quant strategy, where you are watching over the bots or the algorithm on some frequent basis that you work out internally. And that's what we do, where we constantly are watching over all of our client accounts and all of our client markets and whatnot. But my job, specifically what I do, what my day-to-day operations look like is, I don't do too much in the way of like cold emailing a lot of places or do anything like that for our biz dev work. I work with a lot of other companies in crypto that sort of have the same. Something I realized really early was a lot of our deal flow is best going to come from partner companies. So I started working with a lot of companies that would have the same clients as us, but are doing something completely different. So for example, like I started working with a lot of marketing companies in crypto and built that work with them where they felt comfortable, and I showed them a lot of what we do, a lot of our internal business practices, that ethical side that we focus on. And they got them comfortable where they were fine if their clients asked about market making to recommend us and that's like a big badge of pride, is a lot of the companies we work with in that regard will recommend us as the market maker. And that's really important for us. And that's how we meet a bunch of tokens like that. And usually what happens is we talk with them, we negotiate. They can't believe that we're not trying to charge them a bunch of money for market making. You would not believe how many calls I get on where I talk to somebody and I tell them like, yeah, we don't charge a monthly fee for market making. Just as long as you have a market that we can make, that we think we can do decent with in terms of like our trading strategies and whatnot, no problem. Just have an account funded and we'll turn what's normally a cost center for you into a profit center, where we're actually rev sharing a lot of times with these token projects, and they're making money off of getting to work with us, which is that's impossible. That's never existed before in market making, like in crypto. But what's so weird is it's like super common in traditional finance. It's just crypto is so backwards in some ways. It's really weird. It's like for such a technologically progressive industry, it's incredibly backwards in a lot of the human relationship side of things. It's really interesting.
We are learning.
Yeah, true. We're learning, and that's what we do. Is we're trying to learn. That's it. And yeah, and there's nobody really to blame for that, besides people being predatory. But besides that, There's
That's
nobody more.
human nature, I guess.
Yeah.
That's
You're far more pessimistic than me about human nature then, because yeah, I just love we get to meet so many like good projects that
right.
they're so focused on the good that I'll forget for like 10 minutes that there's mostly like a lot of these companies are bad, and I'm like, oh dang it. You take what you can get, and
It
we just
makes you
keep trying
feel
to.
good, though.
Yeah, it feels great to know that one client told us that from our rev sharing every month that paid for all of their server costs.
Wow.
And that was like, that made me, I was like about to cry. I was like,
Yeah.
oh my gosh, wow, we're having like a real effect on the market. We're actually helping people. That was like, that sounds amazing. That was a great feeling. Yeah, absolutely.
Definitely, it's nice.
Mm-hmm.
And I also had a question because you speak to people across all of those aisles. You work with a lot of what we call crypto royalty.
Yep.
How has your experience with when you speak to companies like Gemini, who let's call them are like VC royalty because they are the Winklevoss brothers, right? And
Yeah.
yeah, and then on the other side you have like people who started up in their garage bands and like
Mm-hmm.
now made a name for themselves. They are scrappy because they had to be scrappy, but now they
Mm-hmm.
are in a place where they are doing very well for themselves. So how do those meetings pan out? What are the key differences that you see when you speak to people who are very refined because they were born refined and people who made money with hard work?
That's a really good question. I've never actually thought about it differentiated in that way, but you're absolutely right. There really are like two different groups in crypto in that
Pedigree.
regard.
Yeah.
Yeah, it's really interesting. Yeah, there's a very different approach usually that I take like to both. And so when I talk to a lot of those venture-backed groups like you're describing they've got, you can look at them on Crunchbase and they have a
Yeah.
number of investors. They've raised Series A, B, C, D, E, F, G, the whole alphabet. Like those guys,
Mhm.
they're usually incredibly careful about who they talk to and who they work with. They'll take a meeting with you, but if they sniff out that you're maybe a little bit suspicious, or maybe they question the legitimacy of what you're doing at all,
Mhm.
they're cutthroat. They'll just cut you out. They won't do anything like that. They like to keep, and I really respect that about them, that they keep they're fine turning away deals that might make money just because maybe they talked to a friend of theirs that gave them a bit of a bad warning about you or about
Mhm.
your company or something like that. And so I love that they're very transparent and very, you can trust them is what I'm saying. I love that. So that part I really like. With the
Paramount.
garage startups, it's usually one of two things. Usually what you find is they're either like your best friends on earth and like the greatest people, and they started from their garage. Like Redcoin is exactly this. It's a guy who he was like a developer with Dogecoin, and he's like a crypto martyr where he's like fine losing money, not ICOing any tokens ever, just so
Mhm.
that because he believes in like, and these people believe in like, this group of people, I guess, they believe so deeply in the ethics and like the future of blockchain that they don't really care too much about the money. They care way more about the adoption and getting people
Mhm.
interested in it. But then there's the second type of startup, like in the garage category, where they're like the ICO scammers that are like trying to steal every penny you have, or like the pump and dumpers. Yeah, that group is like usually pretty fractured. It's usually they're either some of the best business partners you're ever going to meet, or they're like just planning to steal money from you in some way. It's usually one of the two. Yeah. So that's, I would say, the divide between the two of those groups. Yeah. But
Mhm.
that's a really good. Yeah, I have not thought about that, like in terms of those two different divides, but yeah, it's very apparent now. Yeah.
No, definitely, because there's this saying which says that raising money is not that hard as long as you know the language that VC speak. So
Correct.
now the thing is that because you were not born into royalty, you don't know that language. It's like speaking some other
Yeah.
language for you guys, but for them, it's like second nature.
Yeah, you have to learn. Yeah. Yeah, like I had never, so like my first like System 9, we're not a VC funded company at all. We're bootstrapped. It's a lot of great guys that, and this is what sold me to join was it's a lot of great guys who are fine not taking a paycheck for a while because they believe so deeply in the future of what they're doing that they know it's going to work. They're confident it's going to work, and that's hooked me. Yeah, I hope I like, not to be braggadocious, but I hope we're in that. At least a lot of our business partners would say we're definitely in that garage band, but the great guys category.
Definitely, the conversation has been really insightful. That does not happen unless you have done your homework.
Absolutely, certainly. And there were so many calls where like I got, especially when I joined System 9, like coming from, I was very familiar, like you mentioned, I had started and learned a lot about crypto really early, but there was about a 4 or 5 year period where I forgot about it. And I was focused on university and then getting started in a startup and all that stuff. That sort of kept me away from crypto for a while. And so when I got back into it, there was so much to learn that there were some calls where I would have a client on the phone, like explaining things to me and teaching me, because I'm fine asking if I don't know something. I'm like, please, no, I don't know. Tell me. And just getting a lecture for 30 minutes about some intricacy of their blockchain that like as everybody in their community knows, but I don't. So I'm like, okay, well, please teach me. I got no problem. I love learning. So please. But yeah, you're right. It's all about the homework, and it's all about knowing that you really know your stuff. And yeah, I hope we're there.
Definitely, and crypto is all about alphabet soups, right? You
Correct.
maybe sleep for 5 hours and you say, okay, now you have no idea how crypto works. What's Lego money?
Oh my gosh, yeah, like when I remember Peter, our CEO, whenever DeFi really started kicking off, he told me that because I'd never heard of Uniswap, and he was like, Uniswap it's an order bookless exchange, and I just went, huh? What? An exchange cannot have order books? How does that work? And he explained the whole thing to me, and then he started going into about automated market makers, and then we've got some interesting internal theories about ways to improve AMMs and stuff like that. So it's fun to. I love learning, and crypto is one of those places where it's like you've got to learn so much all the time that to keep up with things. But I guess that's good. That means we're on the forefront of technology. And I mean, like the closest industry I can think of being similar to that, like in the past, was for like hard drives, for example. So like disk drive technology, whenever it was being improved, it was like there was some order of magnitude improvement on a month by month basis, which is very rare in an industry. And that's what crypto's like. It's somebody comes out with a decentralized exchange, and then within a month, somebody's got a better version of it with some unique feature that's never existed before. And then something else, somebody improves on that and on that. And then it's just that crypto is such an innovative place, and I'm obsessed with innovation. And so I love that there's all these new things. So yeah.
Right. Let me paint a timeline of sorts for you, and feel free to stop me and correct me wherever you feel.
Please.
So ICO started around 2515, 2516. Some say 2013 with that Mastercoin thing, but they really took off in 2017, right? So that created a czarist regime of sorts where had you been pre-vetted by, let's say, VCs, or if you had deals with those exchanges by paying thousands of dollars, you got to make money out of that. People got fed up of that, or maybe because crypto winter came for whatever reasons, because it was Chinese New Year or whatever. Everybody has their own theories.
Yes, correct.
Now, after that, we hear about initial exchange offerings. So now instead of these exchanges and these tokens being separated, they join together and give you a unified offering of sorts, right? Side by side, decentralized exchanges have been existing, right? IDEX was there. I'm pretty sure a lot more exchanges were there. Did they have order books back then, or like they never had order books to begin with?
Like for a lot of these initial exchange offering coins, yeah, there were order book exchanges have been around for a while. Like
not these. I'm talking about the DEXs, like the decentralized exchanges. Did they have order books?
Yes. Yeah, there were some decentralized exchange. Like I can think of Nudex has been around for IDEX as well. They've been around for a while that were decentralized order book exchanges. Yeah, absolutely. They've been around for a while.
Got it. So they had order books, right? So I'll now proceed. So now people thought that initial exchange offerings were even a bigger collusion than what was happening earlier. So now they want that DeFi thing going. And
Yeah.
it's a lot of dumb money moving if you look like if you ask somebody who has been reading, right? Now
Yep.
they are also order bookless, they speak about automated market making. How
Mhm.
does that relate to your side of business? Like
Mhm.
the way I see it, it's exactly what you guys have been doing, and now there is a huge demand incoming for what you guys do. How do you guys plan to scale it up, and what are your ways which you just mentioned about improving the process itself?
Absolutely. So yeah, decentralized exchanges are providing a brand new product line in essence for like if you're looking at it from like a product point of view, all market making in general is a one product game where it's you're market making on an order book, that's it. It's very
Mm-hmm.
simple. Usually differentiation comes in like pricing or something like that.
Mm-hmm.
But now this is adding another element where we got a lot of clients that we're talking to and building out solutions for where we're going to be able to market make between centralized and decentralized exchanges and provide solutions in that regard. So there's so if you think about the shift from centralized to decentralized as like a big paradigm shift in terms of like the billion, what was it, like $1 to $17 billion in like a 30-day period in DeFi
Exactly.
getting, yeah. I think you're going to see that there's going to be so much more growth in DeFi once ourselves and a lot of the other institutional market makers finish building out and continue to bring liquidity from centralized exchanges to dexes.
Mm-hmm.
That's something that's going to be really interesting to see. So I think you'll see that probably sometime Q1, Q2 next year, where on all of these decentralized exchanges, you'll see market makers and like price feeds be identical between them. Right now, like on a lot of Uniswap pairs, the spread on Uniswap to a centralized exchange is unbelievably wide. With
Mm-hmm.
some of like whenever some of our first tokens got listed on Uniswap and did all the work to do all that, and they were actually seeing some volume on Uniswap, their price would sometimes be 10% out of line with a centralized exchange price. And we were just sitting there going, what on earth? There's going to be so much that we can do once we connect these two. And so I think you'll see that like once more, plus there's a lot of non-ERC20 tokens, big and small, are now building bridges to Ethereum's DeFi network. And so I know that a lot of so you're going to hear in like a few weeks to a few months time that a lot of big projects are building bridges between their blockchain and Ethereum so that they can connect their user base to the DeFi network. And that will be another really interesting, and we're assisting in that with a lot of these big tokens in terms of connecting their liquidity from centralized to decentralized. And so to me, that's like the big next thing. And I think that's what in that timeline you're describing, that's what in a few years we're going to be looking back on, and we're going to be saying, yeah, when DeFi first started, it was illiquid, but there was a lot of interest and a lot of money. Now, and then there will be a ton of new. I guess I'm really interested in the bridge side, so I think that the bridge side is going to be really big. Yeah.
Got it. So when you talk about bridges, you talk about basically interoperability between different
Correct.
blockchains, right?
Yes, exactly. Yeah.
Got it.
Some people are trying to do that through building a blockchain that can connect to existing blockchains, but I don't. Yeah, which is funny, but it's like I'm not going to get in trouble and name names or anything, but there's a lot of blockchains that their value proposition is that they allow for the swappability between blockchains. But we're finding that most of these these tokens don't want to go through a third party to do that, so they're just doing it themselves. Like they're building their own swapping mechanism, or they're building their own liquidity pool to be able to swap their token with Ethereum, or their token with maybe an ERC20 wrapped version of it. That's something we're hearing a lot about. So
Got Got it. Yeah, that makes sense. And
Mhm.
we spoke about DeFi a lot, but we never got to define it. If
Yeah.
your mom asks you tomorrow, like, son, what's DeFi? I looked it up. It says
Yeah.
decentralized finance, but what's after that?
What's that even mean? Yeah.
Yeah.
DeFi is a unique phenomenon. Like I heard somebody, before I define it, I'll say that, like, I heard somebody say that, like, DeFi, somebody asked the question of, like, if DeFi is a bubble. And I heard a really interesting response to that, which was, it's hard for it to be a bubble because the only people that know about it are the people that are really deep in crypto. So there's that Rockefeller quote where he said that, I think it was Rockefeller, where it's, I got out of the stock market when I heard my shoe shine boy ask me or give me a stock tip. It's ICOs had that exact same phenomenon where you heard people on I literally, my grandmother asked me if I could buy her a Bitcoin, like in 2017,
Yeah.
like in November. And I was like, okay, there's a big problem here if that's the case. If people that know nothing about crypto are asking about crypto, something's wrong. Or something, maybe it's a little too big.
But crypto is not Bitcoin. The way we see it, like in our entire
Of course.
Bitcoin
Yes.
is separate, crypto is some other thing.
True, but Bitcoin is 60% of the market cap at the moment of all crypto. So it's hard to say that crypto is not Bitcoin because the majority of the money locked up is in Bitcoin. But regardless, it's like a philosophical debate at that point. But to define DeFi, it's DeFi. I would say it depends on. There's two real DeFi applications that I guess maybe DeFi is a bit of a conflationary word. There's two terms, I guess, that the way I see it really, that are two different types of DeFi. So there's one DeFi, which is decentralized finance, which is the actual financial application. So a great way of looking at that would be like lending. So you can look at something like MakerDAO, or where there's you put money in a pool and you can take a collateralized loan out, and it's essentially taking away the bank from banking. And that is what decentralized finance is. But then there's the secondary portion of it, which kind of gets conflated a bit, which is decentralized organizations. So there are all these tokens that are DeFi, and what they are really is they're organizations that have democratic or decentralized voting and governance authorities. And a lot of times they are the ones that are making these decentralized platforms, like a lot of these lending platforms and whatnot, or like Uniswap, for example. They're not managed by some big corporate entity. Instead, that they're managed by a governance token or a democratic organization. That's really like the way. That's how I would describe it. The decentralized finance aspect of it is just the actual taking away. You can boil it down to just saying taking away the banks and the institutions from finance and seeing what that looks like if it's democratic. But then there's also the interesting feature that is organizations like DAX and DAOs, like Dash, for example, DASH. They're a decentralized organization. And so you could even say that they're like one of the earliest DeFi projects, being super early in crypto, as like one of, I guess maybe, I don't know if they're officially the first, but they were pretty early in that regard. But yeah, decentralized finance is something that's been around a while in crypto, but it's just now blowing up because of all these like YAM crypto bubble explosion coins.
Kimchi tokens.
Yeah, the food tokens.
Yeah.
I remember when Yams, like I was watching like the one of our CEO and CTO were really into. They were like, "Have you guys heard of this Yam thing? It's like up 10,000% in the last hour. Like, what's going on here?" And we were like watching that, and I was like, "Oh, this is something we should like all into. Like, is this cool? Like, is this something actually where that's got a cool product behind it?" And my CEO was like, "No, it's just the word yams. That's it. There's not really a ton else there." And then within like 2 days, it was gone. It was like it had blown up by that point. So I was like, that was, I guess, the maybe that's like the like one. If you want to know what DeFi tokens are, like all these food tokens, just look at the story of yams. That's all I'll say. Yeah.
If I were to talk about food tokens, right, and separate it from the entire
DeFi
movement, let's like call it so, These food tokens are about, okay, so you deposit some money into a smart contract of sorts, maybe on
Yep.
Uniswap, and it gives you 2 or 4 tokens back. And
Yep.
then another guy comes and says, if you deposit 4 of those coins, I will give you 16 of my coins.
Mm-hmm.
You Then a third guy comes and says, if you give me 1 of your coins, I'll give you 16 coins. And
That sounds oddly Ponzi-esque,
it
doesn't it?
is. It is.
Huh. For any listeners, I'm doing that sarcastic thing where like you rub your chin, you're like, that sounds fake, or it's
Yeah.
like a Ponzi scheme. Yeah,
Yeah.
I'll just say, as someone who knows a lot of the organizations or has sort of been early in a lot of these projects, I would not advise anybody gets into DeFi from like an investment point of view, just because we were talking about this the other day with one of our advisors. They were like, this guy was like, oh yeah, I've made thousands off DeFi, and we were like, okay, what's your success rate? So you invest in like 20 tokens, how many of them do you actually make money on? And he was like, oh, 2. Like out of 20, he's made money on 2. And it's that's gambling. That's just outright
It
like
is.
you're playing blackjack with coins, basically. Yeah, that's what that is. Yeah. And
And
it's mostly Ponzi, yeah.
yeah. Here is the philosophical side of this podcast.
Mm-hmm.
So it's obviously a triangle shaped scheme. We call that pyramid schemes or Ponzi schemes.
Yeah.
But you see some of the biggest names in crypto or Bitcoin now speaking about these food tokens. How did that come about? What's your take on that? Are they
On how quickly they've blown up, or what do you mean?
this is the philosophy side of things. So
Yeah,
it's
yeah,
more about, are those people really trying to scam us? Like by definitely trying to push us towards tokens that are obviously Ponzi, and they see it to be Ponzi because these are like crypto experts or so on.
yeah. Mm-hmm.
Or is it that these guys are so deep inside it that they do not see it as a Ponzi scheme, which is how philosophers describe Ponzi schemes. They don't say that people are dumb. They say that because you are taken so deep inside the rabbit hole that you do not see that triangle that you and I can see right now.
That's exactly. I don't want to call them dumb because it's like it's actually a lot of the technological advancements that have existed in DeFi and that are new to DeFi are genuinely brilliant. So, like, I studied a lot of economics in university. I published a
Please
paper in
go ahead.
economics.
Yes.
It's amazing to see some of the brilliancies in terms of the improvements to tokenomics that are existing. But there's this, it's almost like there's the disconnect comes from the people that make the contracts and the tokens and the people that buy them. So the people that make them, I don't think they're making them as Ponzi's at all. And I think they see that and they're like concerned by it generally, or they're just along for the ride for the roller coaster effect of it. But what's interesting is that they're actually innovating. They're actually coming up with these really interesting new, like the original sushi contract and like the original Uniswap contract. They're all incredibly innovative things. They come up with brand new ways to invest, to use your money, and to make to take advantage of blockchain and come up with new products on it. And they're all really interesting and cool in that regard. But there's this inherent crypto speculatory side where we're so excited about how quickly will this thing move. It's like the old meme of, is it going to moon? Is it going to moon? Are we going to be able to buy Lambos today? It's like that side of it is so intrinsic to crypto that it's almost crowding out all of the real innovation that's going on in DeFi. And that's the really cool stuff. Is what I'm really excited about is DeFi is going to have a DeFi winter. It's going to have like crypto winter happened in 2017.
Interesting.
In 2018, DeFi is going to have some kind of a DeFi winter. And you're going to see that all of the DeFi projects that exist in a few years are going to be, what happened in the crypto winter, in my opinion, is a lot of companies went out of business that didn't have great products. And so the only ones that did survive were the ones that had genuinely innovative, good products. That's how recessions work. It cuts out a lot of products that are good, but not
fair?
great. Huh?
Like, is that fair to say that those who went under were bad products?
No, I'm not saying they're bad. I'm just saying that looking at it from a
Hindsight
traditional
is
business.
2020, right?
No, hold on. But looking at it for, yeah, of course. But that sort of adds in where it's like I'm not saying that projects that went under were bad. There were a lot of really good ones. But what I'm saying is the only ones that survived a while were the great ones. That's my point. A lot of really good projects fail. Like, it's common. If you want to look back, Xerox, like, and this is like a bit of an older technology analogy, but Xerox had so many amazing ideas, but it never did anything with them. And so what you're finding, yeah, exactly. So you're seeing that a lot of these projects, sometimes they have really good or great ideas, but they just can't make them work, and that's the business of it. But the ones that did survive from like pre-2016 or pre-2017 were ones that they had something so good that even in a recession, they could keep it going. That's my only point. And I think what you're going to see in the future is once there's like an inevitable contraction in DeFi, you're going to see that the projects that survive are incredibly innovative. And you're going to see that once that speculatory, like, hey, is it going to moon today, goes away, you'll see that they've got some really cool products. Like, we're seeing that now a lot in a lot of the really early tokens, like Cardano, IOTA. They're coming out with genuinely innovative, amazing products. Zilliqa is, Dash is, all of these older projects, they're coming out with things that are genuinely having, like, smart city stuff. They're coming out with stuff like that that's actually having a tangible effect on the real world and coming out with cool new products. And that's what I'm really excited about seeing DeFi doing in the next few years, is like having real effects, having really successful, innovative products. That's really what I'm excited about. Yeah.
Glad to hear that.
Yeah, I'm really optimistic on the long-term health of DeFi. I'll just say that. Yeah.
That's nice to hear. And how does the role of a market maker expand or scale in the realm of automated market makers?
Automated market making is, and I guess a lot of readers or listeners that don't really know too much about the difference between automated market making and market making. Automated market makers are very low-tech versions of what a market maker is supposed to do philosophically. So they don't really compete with us in any way. They actually, you can think of them as more of a replacement of order books rather than as a market maker per se. And our CEO has a very, our CEO has a very fun, I'm just giving like an analogy, but our CEO has a very funny point on this. And he says, he's like, if your market making solution is like an equation like AX plus BY equals C, then he's like, I'll out trade it any day. Like, it's not something that's really like a competitory market making side.
Exactly.
But on the DEX side, it's really interesting because there's a lot of DEXs now that are coming up that are liquidity pool based, and there's a lot that are order book based. And so I think we'll start to see this harmony exist between centralized exchanges and decentralized exchanges, where there's going to be a lot of liquidity movement between them. And that's going to be really interesting to see. I think it's just, for us, it's a matter of, we're going to be some of the first people building these bridges between centralized and decentralized. And that's really exciting from an innovation point of view. So I'm really excited about that. And I think that people that are in crypto, it's going to be fun to watch all of the connections that are built between centralized and decentralized. And a lot of times I think the projects that are moving quickly that aren't already on DeFi, or maybe they were pre-DeFi or something like that, the ones that are going to do really well are the ones that build those bridges sooner rather than later. And bridges is in some tokens we're working with are doing what's called, they're working with custodians. So you can look at wrapped Bitcoin, for example. So like with BitGo, you put Bitcoin in, you get wrapped Bitcoin out. There's a lot of tokens that are doing that now that are doing, they're going to take or like whatever their token is, and you can put it in a smart contract or send it to a custodian, and that custodian will hold your token and KYC and AML policy you and all that stuff, and you'll get out a wrapped version of the token. Right. So the projects that are first moving on those and first moving in that regard are going to be really successful. And so we're working with a few of them on that, and like connecting them to custodians, as well as actually working now on market making both the wrapped asset and the original asset. And yeah, I'm really looking forward to that as well. Yeah.
Got it. Got it. To move ahead from this DeFi conversation, how do you see this industry growing in the near future, based on the fact that the crypto adoption hasn't been as like stellar, to avoid the pun, hasn't been as stellar as we had expected it to be? Like, what are we doing?
Yeah, I think so. Okay, crypto, and maybe so. This is a very unique. I haven't heard anybody talk much about this, but I think that adoption in crypto is going to first come through bridging traditional assets and bridging, and like you're seeing this a lot with Grayscale, for example. I think that if you want to think about any one institution as being able to bring more people into crypto than anybody else, like everybody thought that like payment processing was going to be how people get into crypto or whatnot, and you're seeing that there was some growth there, but not a ton. I think if you want to talk about like the people that are, and this is maybe a weird opinion, but the people that are actually having the biggest effect in the future and now on making crypto like popular outside of people that are just in finance is going to be like Grayscale, where they're opening up crypto to institutional investors through regulated products. And the reason I bring that up is I think that the future is going to be, DeFi is going to continue to grow, obviously, but there's going to be this complete opposite reaction, in my opinion, where traditional assets are going to begin to get they're going to begin to be tokenized. And we're working with a few of the very early groups on that are tokenizing assets from traditional. We've seen gold tokens and silver tokens and stuff like that, but I'm talking about like bigger commodities and bigger assets, and maybe larger security token offerings and stuff like that. I'm really looking forward to asset-backed tokens being some large play in the future. I think that's really, if I had to say like a 5-10 year prediction, I think that asset-backed tokens are probably going to be some of the biggest tokens in the world in the next 5 years. Yeah.
Got it. Riddle me this.
Please.
Is it utopian or is it dystopian that, let's say, 10 years from now, you walk up to me, I am in a very tattered t-shirt, wearing very baggy shorts or something like that, and you are like, what are you worth, man? You probably look like a homeless guy. And I said, no, here's my wallet. I own 1% of this, 5% of that. It's in this token, it's in that token. How would you take me as somebody who is sane or as somebody who has like really gone crazy?
Oh, that's interesting. I would say it really depends on if you're holding a bunch of DeFi food tokens or if you're holding a bunch of like actual usable tokens. Oh, asset-backed.
Asset-backed tokens. I own
asset-backed.
0.0% of some Mona Lisa.
No, that's different. That's so those meme like security token offerings of, oh, you can buy a percentage of a Lamborghini. That's so cool. No, come on, dude. That's not cool. That's not asset-backed. I'm talking about like, here's maybe one that'll be interesting. Think about if you look at the CME, for example, and you look at like a lot of that. CME, the Chicago Mercantile Exchange.
CME.
So commodities, like I'm talking about oil and gas. I'm talking about food, like grain, cotton, like commodities, like publicly traded, open, large commodities, crude oil, things like that.
Things that have demand.
Yeah. People in crypto, that when they hear asset-backed tokens, they think, oh, I'm buying a percentage of a painting. It's, yeah, that's true. That's like on the NFT stuff is really cool as well. But I'm talking about like traditional finance,
commodities,
assets.
Or like
commodities and assets. Yeah. That's like my weird, and even hopefully steel in the future as well. That's something that like, what's funny is one of the groups that we're talking to, I told them my background in steel, and they were like, oh, do you want to start talking? Let's start talking to steel producers. Come on, let's commoditize steel, like, or tokenize steel. That's a real thing. Like, people are, I actually really do think that in the future, there's going to be a lot of these super large market cap, because you want to talk about how to get institutional money interested in crypto and thus grow the retail side as well. It's going to be through making it where hedge funds and where banks to hedge positions or to get into an asset can do it through digital assets, and do it not only through these traditional exchanges, but also through Binance or through Huobi or OKEX or some exchange. They can do it on all these exchanges now, as well as the CME or some other stock exchange or some commodity exchange or something like that. Yeah. That's what I mean by that. Like commodities more than like buying a percentage of a Lambo.
We need smart money. We have dumb money. Now
Exactly.
We need smart money.
I'm honestly really optimistic about like smart money coming into crypto more. And I think that when you look at like so if you want to think about, if you want to get like institutional money's opinion on crypto, just look at the I can't remember the name of the asset exactly, but it's one of Grayscale's investment trusts where you can buy Bitcoin as like regulated investors in the US can buy Bitcoin, but it always is a multiple of the price of Bitcoin. So for example, at the peak of 2017, early 2018, right before Bitcoin crashed, the price of Bitcoin relative, so the price of, if you're an institutional investor in the US, like at Fidelity or something, and you're trying to buy one Bitcoin, your premium was like 8 times the cost of Bitcoin to own one through like Grayscale. Yeah. So, and we're starting to see again that institutional money is so interested in Bitcoin that they're willing to pay like 20 to 50% more than the listed exchange price to be able to do it through a regulated, insured authority, like in the US. That's like why Grayscale is so successful, is because of their regulatory status. And it's obvious that there's demand from institutional investors, and there's going to be a ton of money that goes to the companies that can first create more avenues for institutional money, smart money, like you mentioned, to be able to get into crypto and digital assets in general. Yeah.
Got it. And now as we like enter the last stages of this podcast recording, I'd like to ask you a few fun questions of sorts.
Oh, please.
The first things that come to your mind when I say these names, right? So the first name is Elizabeth Stark.
Elizabeth Stark?
Yeah.
I'm unfamiliar. Who is that?
So she's the chief executive officer at Lightning Labs. The guy behind, I like shouldn't use the word guys because she's like the biggest like women in blockchain thing.
Oh, gotcha. Yeah.
So these guys are building a layer 2 on Bitcoin.
Oh, okay.
Yeah.
Yeah. Like, I'm assuming they're behind like a lot of Lightning payment processing stuff.
Exactly. Yeah.
Yeah. Oh, yeah. I know the product. Yeah. Very optimistic. It just depends on who can they convince to use their network. So somewhat optimistic. Just there's a lot of payment processing companies that are in, and I think that they're going to grow over time, but I don't think that they'll be unicorns, is my point. Yeah. And payment processing in general, I'm not specifically aware of like their company, but yeah.
Got it. And now 180-degree shift. How about Justin Centron?
Incredibly pessimistic. Scam. Yeah. Run away. Don't unfollow. Yeah. Yeah. There's a few people in certain industries that like when you hear their name, it's like black flag, like run away. And that's one of them. Yeah. Run. It's like maybe like I'm trying to think of like an analogy with another industry or something like that. It would be like oh, I don't know. I almost said George Soros, but the thing is, like, George Soros was like an incredibly successful investor and like a great, like, super famous guy.
Let's leave it at that. Otherwise,
yeah, sure. I'm being too
the
mean.
legal team might hate you tomorrow.
Yeah, sure. Yeah.
Right? So next up is.
I'm not saying he's done anything wrong. I'm just saying I wouldn't trust his investment advice. That's all I'm saying. Yeah.
Definitely. Then is Chief Sushi.
Optimistic about the innovation, pessimistic about the current speculative usage of it. Yeah, that's, I think I'll say that. It's like all the DeFi tech stuff is so cool, but it's being washed out by or crowded out. Like in economics, there's this idea of crowding out where interest rates can be like moved too much by governments whenever they're trying to have an effect on the market. It's called crowding out. It's something like, I guess if some listeners aren't familiar with economics, definitely look up crowding out. You're seeing that speculatory trading, which, believe me, it's incredibly valuable. Speculatory trading is like the lifeblood of crypto, but sometimes it has this effect where it can hurt innovative products. And I think that there's like a lot of interesting stuff in DeFi that's being crowded out by that. Yeah.
Got it. Next up is Vitalik Buterin.
Incredibly optimistic. I think that his rapping is hilarious. I thought that was like, everybody's cringing, but I see that they were trying to be like clever and stuff like that. And there were some good lines in there, but incredibly optimistic. I think that Ethereum is, and especially Vitalik, is having an amazing impact on people that aren't in crypto and getting them into crypto. I know that might be a weird opinion for people in crypto, but if you look at like his appearance on the Portal podcast, check that out. That he had a great talk with Eric Weinstein there about crypto, his involvement, a lot of the history, and as an economist, a lot of his ideas are so interesting, and the fact that he's been able to apply so many unique experimental economic principles to crypto is just something that I really admire. So yeah,
definitely. That guy backs up whatever he says.
Absolutely. He has a spine. Yeah.
I
respect the hell out of him. Pardon my French. Yeah. Yeah.
That's all right. How about John Mcafee?
John Mcafee, the guy that made Mcafee security. Yeah. Radioactive. Stay away. Isn't he like going to jail? Didn't they make a documentary about him that was like alleged a ton of stuff about like
It was called Gringo.
I think. Yeah, I've never watched it, but
it's Netflix.
Yeah. So if you've got a Netflix documentary about you and maybe your potentially allegedly illegal activities, you should probably be very careful about anything he's involved with, unless it's obviously vetted, of course. Yeah.
He was on the HackerNoon podcast a few months ago. He is he is very interesting. Like, he's got these experiences. He used to work for the CIA. They had this entire like vetting process about him, which was like, so how about like, have you cheated on your wife? He was like, yes. Would you do that again? Yes. And there were so many questions about him, and he said, yes, I would do that. And they hired me because they said, like, pardon my French, this motherfucker is not scared.
I mean, I respect the hell out of somebody that's willing to be that honest.
Yeah.
Would I go into business with him? No, not at all. But do I admire, I guess, that? Yes.
Yeah, exactly. Right?
Yeah.
Last one up is quant traders. Like, it's not a person, it's a community of people.
Yeah. Yours. Quant trading it's incredibly valuable. There's a lot of opinion in traditional finance. It's a very controversial thing sometimes because of like and this is obviously a little bit different, but high frequency traders are very, you either love them or hate them in traditional finance. If you look at, for example, IEX, the exchange with speed bumps, like Flash Boys was about, there's a lot of divisiveness about whether or not they're a good thing because of like co-location and how they were like buying for millions of dollars the closest possible real estate to a stock exchange so that they could be 1/10 of a millisecond faster than their competitors. It's like that sort of stuff is a little bit skeptical about whether or not it actually helps anything or helps the markets. But quant trading in general is something it's been the lifeblood of crypto. A lot of market makers that are in that, I defined earlier that there were two real buckets, like the altcoin market making and then the guys that are trading that are more like hedge funds or quant funds. Those guys are doing amazing work. They are incredibly valuable for the industry because they provide us with liquid markets and they provide and like ourselves as well, but with altcoins, we provide liquid markets that make it possible for retail traders and for people that just want to get into crypto to buy in and out without having huge impacts on markets. And it's incredibly valuable. And quant trading in general is something that's I think you're going to see that in crypto, it's going to continuously grow. And I'm really excited for, as derivatives markets become more and more liquid in the future, you're going to see that quant trading is going to grow incredibly quickly, and it's going to be a huge inflow of money for the market caps and for the actual trading volume that's being done in crypto. So yeah, I'm really excited, and it really, I think quant trading is something that if you're not somewhat familiar with it, you should definitely try to read more about it, especially in crypto. So yeah.
Got it. Got it. Thank you for that.
Of
That
course.
brings us to a close of the HackerNoon podcast. And like, if you have any things to say to the HackerNoon subscribers, now would be the time. The floor is yours.
Absolutely. Thank you guys so much for listening, and thanks for having me. Definitely check us out at system9.io and check out our first blog post. Send emails if you're interested in writing or sending anything like that. I hope we can have it published on HackerNoon. That'd be great. And really excited and optimistic for the future of crypto. And yeah, keep your eyes peeled. Watch out for scams, and keep on keeping on. That's how I'll end. And thanks to everybody at the System 9 team. I'm so lucky just to get to work with such amazing people like our CEO, Peter Sokolow, and our Chief Risk Manager, Matt Schellhaas, and one of our co-founders, Ryan Gray, as well. And we've got an amazing advisory team of people like Mariana Danilovich, who is one of the greatest advisors ever. So I'm only here because of the amazing people behind me at System 9. So absolutely. Thanks so much for having me.
Definitely. And thank you for the time that you spent with us. Thank you, Joshua. Have a nice day. And
yourself as well. Thanks.
Yeah.
Bye.
Bye.